Good day, everyone. Welcome to our daily news update, where we bring you the most recent developments in the fast-moving world of cryptocurrency and blockchain technology. Today, we're diving into the latest stories from the past 24 hours, covering press releases from blockchain and fintech firms, political updates, economic implications, and how these events are influencing market movements. Let's get started. First, let's talk about a significant regulatory development that's been making waves across the crypto community. Reports indicate that the U.S. Securities and Exchange Commission, or SEC, has approved in-kind creation and redemption mechanisms for spot Bitcoin and Ethereum exchange-traded funds, commonly known as ETFs. This news, circulating widely on social media platforms like X and reported by various online sources, marks a pivotal step toward integrating cryptocurrencies into mainstream financial products. In-kind mechanisms allow ETF issuers to create and redeem shares using the underlying assets, in this case Bitcoin and Ethereum, rather than cash. This could potentially reduce costs and improve efficiency for investors. Additionally, it's been noted that major exchanges like the New York Stock Exchange and CBO have filed for frameworks to list crypto ETFs, signaling growing institutional interest. Now, how does this tie into the markets? Well, such regulatory advancements often boost investor confidence, as they provide a clearer path for traditional financial institutions to engage with digital assets. We've seen positive sentiment in the crypto markets following this news, with Bitcoin and Ethereum maintaining strong positions, likely supported by expectations of increased demand through these ETFs. Shifting gears to political developments, there's buzz about the White House working on a comprehensive crypto policy report. According to posts on X and various web updates, this report, expected to outline a 180-day plan, could aim to position the United States as a leader in the global crypto landscape. Some sources even suggest a push to usher in what's being called a golden age of crypto. While details remain scarce, this political focus is noteworthy, especially given past tensions between regulators and the crypto industry. If the U.S. government signals a supportive stance, it could catalyze further investment and innovation in the sector. On the flip side, any hint of stringent regulations could dampen market enthusiasm. For now, the crypto community seems cautiously optimistic, and market stability in major cryptocurrencies may reflect this wait-and-see approach. We'll keep a close eye on any official announcements to gauge the true impact. On the economic front, the crypto market is also bracing for broader macroeconomic influences. As reported by several financial news outlets like Cointelegraph and A-Invest, investors are keenly awaiting the latest Federal Reserve policy updates and U.S. GDP data. These economic indicators often influence risk assets, including cryptocurrencies. A hawkish stance from the Fed, suggesting tighter monetary policy, could pressure crypto prices as investors shift toward safer assets. Conversely, signs of economic growth or dovish signals could fuel risk-on sentiment, potentially lifting digital currencies. At the moment, the market appears to be in a holding pattern, with Bitcoin consolidating after recent gains. This consolidation might be directly linked to the uncertainty surrounding these economic updates, as traders hesitate to make big moves until the data is clear. Now, let's turn to some exciting updates from blockchain and fintech firms. A press release highlighted on platforms like cryptonews.com discusses a new crypto project called SUBBD AI, which aims to provide an alternative to high-fee content platforms. By leveraging blockchain tools and staking incentives, the project claims it could save creators significant amounts over the next decade. This is a prime example of how blockchain technology continues to disrupt traditional business models, focusing on decentralization and user empowerment. While it's too early to predict the market impact of such initiatives, they often attract speculative interest in related tokens or sectors like decentralization or DeFi. We've noticed a slight uptick in interest for DeFi tokens in recent trading sessions, which could be tied to news like this sparking curiosity among investors. Another noteworthy development comes from the art and real estate sectors, where Christie's, the renowned auction house, has reportedly launched a crypto-only platform for real estate listings. According to posts on X, this platform already features high-value properties. This move underscores the growing trend of tokenization, where real-world assets are represented as digital tokens on a blockchain. Tokenization has the potential to democratize access to investments like real estate, and news of major players like Christie's entering the space often generates positive buzz. While direct market correlation is hard to pin down, altcoins and tokenized asset projects have shown resilience in recent hours, possibly riding on this wave of mainstream adoption. Lastly, a word of caution amidst the optimism. Reports circulating online point to a staggering rise in AI-driven crypto scams, with significant losses recorded over the past year. This serves as a stark reminder of the risks in this rapidly evolving space. Negative news like this can sometimes lead to temporary dips in smaller, less established tokens as trust waivers, though major cryptocurrencies often remain unaffected. It's a critical note for investors to stay vigilant and prioritize security. So, what does all this mean for the crypto market as a whole? The past 24 hours have painted a picture of cautious optimism. Regulatory advancements and political signals suggest a maturing industry gaining traction with traditional finance and government bodies. At the same time, economic uncertainties and emerging risks remind us of the volatility inherent in this space. Market movements reflect this duality, with major cryptocurrencies holding steady while niche sectors like DeFi and tokenized assets show pockets of growth. That wraps up our detailed look at the latest in crypto and blockchain news. Stay tuned for more updates as events unfold, and remember to approach this dynamic market with both curiosity and caution. This has been your daily news briefing. Until next time, take care.